Hello everyone, and welcome to this webinar on embracing digitization, why digital innovation has become an imperative for wealth and asset managers. My name is Anurag Waklu with Dassault Systems, and I will be moderating this webinar. This webinar focuses on the need for and the reality of digital innovations across the financial industry. In this 1-hour session, interactive session, our expert panel will discuss why do firms need to digitize now, what are the compelling reasons, what benefits will they gain, what is the status of digitization across the asset and wealth management industries, the reality on the ground, and how will digitization help and benefit for product innovation, customer centricity, and in addressing regulatory challenges. With over 35 years of experience, 15,000 employees across 140 countries, Dassault Systems operates in financial services and 11 other industries, including the highly regulated aviation and life sciences sectors. We have leveraged this experience and our comprehensive digitized solutions specifically related to regulatory compliance and internal audits to help companies scale, achieve cost efficiencies, and improve governance. A quick note on the logistics. We will take questions as we go along throughout the webinar. So please feel free to raise your virtual hand and ask the panel anything relevant, and I will bring it to their attention. And now I'm happy to introduce our panel today, James Broderick, Massimo Tosato, and Professor Amin Rajan. James is a Group Managing Director at UBS and head of the firm's wealth management business in the UK and Jersey. He is also chairman of UBS Optimus Foundation, UK. Jamie joined UBS in 2013 after 20 years at JP Morgan, where he was head of the firm's asset management business in Europe, the Middle East, and Africa, and CEO of its principal affiliates in Europe. Prior to joining JP Morgan, Jamie was vice president at Wellington Management Company and director of its client marketing services group. He has an AB degree from Harvard College. Our next panelist, Massimo Tosato, has over 36 years of international experience in the investment banking and asset management space. Until December 2016, he was executive vice chairman and global head of distribution of Schroders PLC, listed on the London Stock Exchange, and CEO of Schroder Investment Management. At Schroders, his main responsibilities included growing the group's international expansion, product innovation, and diversification of distribution channels, as well as more recently, investments in fintech. He has an MBA from the Columbia Business School in New York. Our next panelist, Professor Amin Rajan, is the founder and CEO of Create Research, which is a UK-based think tank that specializes in future trends in global fund management. He is the author of 19 widely quoted research reports and has contributed long series of feature articles to Financial Times, Sunday Times, Global Investor, Financial News, and IPE. He is a visiting professor at the Center for Leadership Studies at Exeter University, and until recently, a fellow at Oxford University's Stead Business School. And just a little bit about myself. I, Anurag Waklu, am the business consultant for financial services at Dassault Systems, with over 24 years of experience in the financial services industry, both in investment management as well as technology. Before Dassault Systems, I was a fixed income strategist at State Street Global Advisors and held senior positions at State Street, Fidelity, and a few other firms. I have an MBA from Babson College in Massachusetts and a bachelor's from the Indian Institute of Technology in Bombay, India. Without much further ado, I would like to kick off our session today. Dassault Systems recently commissioned Amin to produce a research paper on digitization and the asset and wealth management industries, for which over 450 asset and wealth managers were interviewed. So Amin, perhaps we can start with you to help set the context of our discussion today in terms of what is meant by digitization and why should firms digitize now?
Yeah. Thank you very much, everybody, and delighted to be here. What is meant by digitization? Well, since about 1960s, we've seen successive waves of changes in information technology. As you'll remember, initially it started out with mainframe systems, then it migrated to to distributed data processing, then to personal computing. And as a result of this evolution, what we've now ended up with are some tools which can have a very dramatic effect on individual businesses. So if we really look at the history of the last 250 years, we had the Industrial Revolution, which brought about a major shift from agriculture to manufacturing. Then in the last century, we had a shift to services, which really brought about a rise in services as the biggest sector in most industrialized economies. And now we're in the midst of a third industrial revolution. And this revolution is fundamentally about the emergence of various refinements in the old-style computerized tools, which are having a radical effect on the business models of individual companies in almost all the sectors. So this revolution is fundamentally about not about a sector, but about business models. Now, the tools that have really emerged as being very influential are things like social media, for example, new digital platforms which enable asset managers or wealth managers to communicate with their clients and give clients various self-service tools. There are also tools which basically improve the connectivity between internal computerized systems and external devices held by clients. There is also fundamental changes in the way data is emerging now, and we're seeing the emergence of big data, which enable asset managers to access a vast amount of information, when they're making investment decisions. As if that's not enough, we're seeing robotic process automation, which is bringing about huge labor-saving labor-saving devices in the back office operations. Then we've also got robo-advisors, which enable individuals to effect direct purchases of funds from their assets or their wealth managers. Then we've also got machine learning and blockchain and so on. So each of these 8 innovations that we've covered in our report, they really are the sort of culmination of changes which have been going on in the information technology space for a number of period of time. And these 8 tools are the ones that we studied as far as their application to asset and wealth management industry is concerned. Now, the reasons why these tools have become important is, a number of structural factors have been changing asset and wealth management industry. The first and probably the most important is the rise of passive investing. Passive investing now has had a very rapid rise over this decade. And as a result, asset managers who are in the active space, they are really now needing to respond with better offerings. There is also the emergence of costs and fees as a major differentiator. We're in a world where quantitative easing has borrowed against future returns, so we're now entering a low return environment. And in this low return environment, fees and charges are very important, and digitization tools are being seen as a way of reducing cost. Furthermore, we're seeing the emergence of new generations of investors. For example, at the higher end of the age spectrum, we are seeing more and more retirees entering into the retirement phase and managing their own money. We're also seeing the rise of millennials. They're entering the labor market, and they're likely to be the biggest employee group over the next 20-year period. And incidentally, they will also be the biggest beneficiary of the biggest inheritance in the history of this planet. This is when baby boomers move on and pass their wealth on to millennials. So we've got a number of factors coming together, which is really promoting the rise of digitization.
Thank you, Amin. Massimo, before we go to you, just a quick, an audience question came in, to say, what is digitization in this context? And Amin, you gave a good example of that. Just very briefly, sort of digitization is the integration of digital technologies throughout the business. And the comment was that, financial firms are fairly digitized. That is on one half of their sort of on the core bread and butter businesses, on the transactional side, on the trading side, on the operation side to some extent. But on the other half of their business, they are actually pretty about, I would say, almost a decade and a half behind other industries in terms of being digital. And this is a lot of the operational side, a lot around the product development and product management sides, and as well as around customer-facing applications as well. So one half of them are they're at the bleeding and leading edge of digitization, but the other half is not. And maybe, Massimo, you can give us your perspective around the asset management space and digitization and the reason to do that now.
Sure. Well, I can share my experience, which has been building over the last few years in the Schroders process towards digitalization, as well as in the build-up of what is today the premier wealth management online in the UK called Nutmeg, of which we bought a stake, and I've been sitting on the board for a few years. And finally, on a personal investment I made in a startup in Italy that is going pretty well in invoice financing. And there are some commonality of characteristics of a benefit that you can derive out of it for customers that are about simplicity, efficiency, transparency, and cost effectiveness. But if I give a look across the board, I think there are three main areas where you can apply digitalization. The operational platform, and as you mentioned, commercial banks and investment banks, out of necessity, have been going down a long way for the last 5 years into that direction. You can build it up in the distribution and marketing side, very frequently substituting physical distribution with marketing cost to have distribution just online. And then on the other side, on the investment processes, on the utilization of big data analytics and building factor investing, in which there are a couple of firms that have been at the forefront of it, actually for almost 20 years, more than 20 years in the case of Renaissance Technologies, or 15 years in the case of Two Sigma. There are also firms that are embracing it all around the organization, but in our experience, it's much more time-consuming and a much stronger effort to try to improve step by step an existing large organization than it is to build a completely new. There are companies that start putting together these three elements of digitalization and are building new business models. So I could mention the case of Nutmeg itself, where I think the technology has enabled companies, new entrant, to strip out unnecessary complexity and cost, opening up wealth management to a much larger audience with smaller capital, and effectively democratizing the service. What Nutmeg does, it offers a similar kind of discretionary wealth management to a Coutts, a Rathbone, and HSBC, but at the fraction of the cost, because they digitalized all the elements of the front end and back end. Interestingly, Nutmeg is not a robo-advisor like some of the American firms, because they decided to leave the human focus, the human management, on the value-added part of asset allocation, while all the underlying content is ETF or passive, or at least in the core part of the proposition. And that is because they thought that asset allocation can add value that can be managed at a lower cost, and the overall lower cost of proposition has the great benefit of compounding. So they don't try to beat the market indices. They try to improve over the longer term, marginally the market indices through asset allocation, and pass on the lower cost to the customers. So over 5 to 10 years, you can see a significant difference. That has been their proposition. In a company like Schroders, a platform has been the main focus of work, but the marketing side in terms of social media integration in the organization and the utilization of big data in all the marketing area has now been completed and it's worked very effectively. The other area where there is a lot of exploration going on, and I know up to about a year ago when I left the firm, it's about how to leverage on big data on the investment side, innovating the role of the analyst and the fund manager. So it's all across the board.
Thank you, Massimo. And it's interesting you sort of outlined those 3 areas where digitization is being, leveraged and utilized and gaining benefits from. And it's also interesting you mentioned briefly about some of the hurdles to adoption of digitization, and we'll get to that in a couple of minutes. Before we go to you, Jamie, one quick question also from the audience, a very brief answer. What is the difference between digitization and digitalization, as that both the terms were used on this call? And I'll answer that very briefly. In the context of this call, we are using those words interchangeably, meaning the same thing in the broader context of digitalization, which is technically the correct word, but we'll use digitalization and digitization interchangeably to mean the same thing. Jamie, what are your thoughts from a wealth management side on, the reason to digitize now and the benefits?
Oh, well, thanks, Anurag. And I agree with your assessment of digitization and digitalization. I used to be a dictionary editor, and I can tell you that, as far as I'm concerned, those are the same word. But what's interesting, I think the wording is an interesting issue, because there's an old term for digitization, and we used to call it automation. And what's interesting is that we've developed this new term, and the reason we've felt the need to develop this new term is that information, although we've always had automation, or at least for a long time, information is now being manipulated faster and in more sophisticated ways. And it has started to replicate certain aspects of the human experience and human insight. Think of artificial intelligence. And all that is happening in an inviting and graphically rich environment. So, and this is all developing faster than anything we've seen before. So I think it's appropriate that automation just doesn't capture the speed at which things are happening and the excitement about what's happening. So when you ask me why is it important for wealth management, I mean, there are lots of different reasons, and I think the Dassault Create report talks about a lot of the different issues. But for me, coming from a wealth management perspective, there are really 2 big ones. One is the customer experience, and one is cost. So one is exciting and sexy, and one is much more prosaic. So what we're finding is that consumers expect to be able to interact digitally with all their providers, and that expectation is being shaped at hyperspeed by consumer sectors largely outside of financial services. So whether it's rational or not, people expect their financial experience to start to look and feel the way they interact with their iPhone, with that same immediacy and the access to data and the convenience. So I think one of the biggest things that we need to focus on from a wealth perspective is what is the consumer expectation, what is the consumer experience. The less exciting area is cost, and I think for most of us in asset management and wealth management, I think the cost potential for digitization is the bigger thing to be thinking about. So we need to worry about cost in asset and wealth management for all the reasons we are familiar with. So it's passive and it's low interest rates and possibly even a market correction, who knows. But what has changed is that automation, as we used to call it, has become much more accessible, much faster. So if you think about what you can do with APIs now, having them sit on top of legacy systems, or when you think about robotics, I mean, robotics is a great example. We can do robotics projects much more quickly, much more flexibly, and at lower cost than ever before. So you've got these two poles, the really exciting consumer end and the much more prosaic cost reduction through digitization of your infrastructure.
Jamie, just can I lob a quick question at you, please? Massimo
go ahead.
Massimo referred to factor investing and application of machine learning to factor investing. And as a result, what we're sort of seeing is the emergence of third way of investing. We had passive investing and active investing. Now, what we're basically sort of seeing is the rise of factor investing, relying very much on machine learning in terms of identifying new factors, turning on the old factors, turning off the old factors, creating the new, and so on. Do you see the role of factor investing and machine learning becoming more prominent in the wealth management space as we found it to be more prominent in the asset management space?
Yes, I think so. I think factor investing, whether it's assisted by artificial intelligence or not, I think factor investing is becoming very interesting for the wealth management sector. Yeah.
Thank you, Jamie.
I mean, you're saying a third way, but in a way, you could see a trend, an evolution year after year in which factor investing is being integrated in a form of active management.
Yeah.
It does help to understand where value is created and how it's created, and it does help to create a subcomponent of the portfolio construction. Yeah. So I personally think that if I give a look 5 years from now, I see a trend towards evolution of the two sides, getting much closer together, where you would start to have more difficulty in the new generation of fund managers to see and experience one from the other.
Mm-hmm. Yeah, I guess the only
That's a personal opinion, but
no, it's a valid point. But I guess the only way that we may see the difference, and the reason why I call it the third way, is that factor investing using machine learning, they would produce what we refer to in our report as commoditized alpha. And then for active manager, the benchmark is not really beating the passive indices, but the benchmark is really how can they beat the commoditized alpha. And so I think at that particular end of the other extreme of active investing, the key benchmark is going to be, whether active managers can deliver over and above what factor investing and machine learning can deliver. And that's what I think is going to be the sort of key distinguishing features between active investing and factor investing based on machine learning.
Well,
and actually, that's an interesting thought. I mean, and maybe we'll address that in a few minutes. Just a couple of quick things. First of all, thanks, Jamie, for your answer as well. Two things. One, audience, there's a poll that we have on the screen right now pertaining to the questions that we just addressed. We'd like your sort of opinion. Why is your firm digitizing now? Across those options, we'll give about 60 seconds for people to answer and have results right after. And while everyone is doing that, Jamie, thanks for outlining, the two sort of key pillars around customer experience and cost reduction. As you can see, those two are right there on the screen as well. Improve customer centricity and reduce costs, as there's some of the reasons why firms are digitizing. And that's also a good segue into our next sort of key point is, specifically around product innovation or around customer experience, customer centricity, customer innovation, and the regulatory space. If you take those three pillars, we briefly, all three of you briefly talked about, big data, AI, machine learning, all the things on the far end of the spectrum of digitization. And Amin, as your wonderful report accurately pointed out, most of the firms are somewhere in the middle between paper and manual processes and the bleeding edge of technology around AI. Most of the firms are on a scale of 1 to 5 around 2.5 to 3, which is, they're applying, to use the old word, automation, digitization in improving their core processes around customer, product, and the big, huge burden of regulatory directives that is never ending and keeps increasing. So we have results on the screen here from why is your firm digitizing now? It's interesting to see overwhelming majority seems to say it's to improve customer focus. And I'm glad people are not doing it just because of the fear of missing out. Okay, so that's good to see. So maybe we can sort of
Anurag.
Yep.
Anurag, I wonder if I could comment on the poll results, because I find it really, really interesting that there's such a focus on customer centricity, which I think, as I described earlier, is the exciting part of things. But I'm just intrigued that people aren't seeing the same potential I would see, for example, in the use of digitization for cost reduction. And I'm equally interested to see that the importance placed on governance and regulatory compliance is the same as cost. That was a surprising outcome, I would have said.
May I make a comment here on what you just said, Jamie? Because in my experience, at least following the two specific companies that I've been on the board or I've been invested, it is true that you reduce the incumbent business model cost and you make it more efficient. So you improve the governance and you alleviate the burden of the heavy compliance we have in our industries today. But it is also true that what we've learned going step by step is that the increasing day-to-day complexity and improvement required to the business actually have quite significantly increased the cost base of all the developer and programming and marketing side. So yes, we have saved money on one side, but we've been increasing much more than expected, I have to be honest and say, on the other side. And that's because of the customer centricity. In many cases, we are talking about relatively simple customer, and their attention span is very short. They want simplicity. They want seamless understanding. Just the wrong positioning of a click can change the effectiveness of your funnel. And so actually the cost in aggregate have not been much lower. They've just been going into different parts of the organization.
But Massimo, you've described that's exactly the way it should go. So that what you've described is actually the ideal, which is to say you're saving cost on the back office stuff and pouring it into the customer experience. So I would say that's the way it should be. We should all be aspiring for exactly that.
Yeah, what I'm saying is that just at the third level, actually your cost might be neutral, much more neutral than you would have expected as a chief executive.
Yes, good point. Yep.
And that's very interesting. I mean, obviously, some of these are quite intertwined with the other ones. Cost is one of the it's always at the top of mind of a lot of people. Besides growth and innovation, and a lot of these sort of feed into being customer-focused, customer experience. And one of the reasons, I think survival in this new millennial customer generation is a big important reason. I think maybe a lot of customer centricity has shown up here. Just to give you an example, one of the top factors millennials use to decide which wealth manager to use is the digital excellence of the wealth manager. And what that translates into in real life is basically if the millennial has a smartphone app for managing their wealth from your firm or not. And that's one of the top 3 reasons. You would think it's performance of the underlying assets and everything else, but this is one of the top 3 reasons why millennials choose a wealth manager. So that's the kind of new generation we are dealing with. So we talked a lot about the customer part of this. Maybe we focus a little bit now on sort of the second pillar, maybe starting with Massimo, you, around how do we benefit, what are the drivers on digitization and in the space of product innovation, product management, product development. And when I say product, I don't mean just product per se. It could mean services or basically anything that your firm sells.
Well, my current firm actually has relatively limited scope of digitalization, and a lot of it is concentrated to building in the customer servicing side, because it's a small firm that focuses exclusively on large institutional mandates. So it's a limited number of customers, large institutional mandates, and a lot of interaction. But if I think about the other organization where I've had experience, I think that one benefit is certainly in the knowledge and information you can get from your website and customer service centers into building and developing new products. You understand much more customer needs and their trends and their anxiety. And from the click on which product at what time, where are they concerned and where are they desire. So you have a huge wealth of information that help you. And in the same way, you can use also technology to do focus group in a completely more sophisticated and high-speed form. You can also incorporate in your new products the innovation on the investment process of your business. And that is particularly effective in quantitative products or in multi-assets. But I would like to go back 1 second on the issue of the customer we were mentioning before. All this is to the benefit of the customer, but it's very much focused on the large organization that feel threatened by incumbents, and on the sophisticated new businesses that are at the heart of the digital innovation. I have to say that when I go around Europe, I see large segment of the market that, and this is a comment to your previous point, I still see large segment of the market that see digitalization mainly as a way to improve process platform rather than business model or being customer centric. And that worries me in continental Europe a little bit.
That's
Massimo, could I comment on that?
Yes, please.
Yeah.
Okay, so UBS built a competitor to Nutmeg, which is the organization, which is the automated advisor that Massimo mentioned before. So we built UBS Smart Wealth from scratch. And one of the most interesting things about the interesting parts of that experience was that when you build something from scratch, and whether it's digital or not digital, but when you build something from scratch these days, you absolutely you rethink the whole process, and you start with the consumer and the consumer experience. So it's an interesting aspect of all the digitization process or process reengineering that you do is these days, when you redesign something from scratch, you end up putting the customer right smack dab in the middle of that whole thing. And it's built around the client experience, and it's built around the customer journey. So one of the interesting outcomes is in the digitization environment is that these projects just automatically, and Massimo was referring to this earlier, they automatically put the client at the center of everybody's thinking. So you no longer start with product, you don't start with platform, you start with the customer, and then build the framework around that. You build the wireframe around that. And it's been one of the most exciting aspects of Smart Wealth for us is that it's taken us through that entire experience of building an entire business around the customer. And I think that's one of the great gifts that digitization has given to our industry.
Yeah. Jamie, I don't know your experience with your own robo-advisor, but our experience in Nutmeg was that the integration of physical services, of a backup, was very important, because even if we think that probably the mass wealth segment, the mass market is the one better suited for this type of operation, because when you start to go into inheritance, tax, art advisory, lending, etc., it becomes a bit more complicated to completely standardize and so be able to transform it in digital format. Even in the mass affluent, sometimes people get stuck. There is some reason where they cannot proceed online because they cannot find an answer. And if they don't find an answer, they abandon you on the way and hardly they come back. And so we found that it's very important to have a prompt, good quality service ready for you online to sort out the difficulties that some people might find in the, for example, on the onboarding process or on the changes of asset allocation or in gathering tax information. And that is very helpful to keep a smooth relationship with the customer. While those companies that are very mass retail in services, call it an Amazon and others, where you have to struggle to get through different push number 5, push number 3, and it takes you 15 minutes of music and numbers before to get somewhere, are extremely cost effective because they have very limited people dedicated to the servicing, but they are extremely unliked by the customer for the type of service. And so while you can buy another blanket from another company that is not Amazon next time, when you're talking about money, you hardly go back to your bank if you are unhappy and if you've been unable to move on. What was your experience in that?
Well, the experience we had with UBS SmartWealth was very similar to what you described at Nutmeg, but I would say the way these businesses are built these days is through versioning. So you put out a hypothesis, and Nutmeg went through this process, because Nutmeg, when it started, was a much cleaner, more streamlined, without too much of a human presence. And then I think you had the same experience that we had, which is that you go out there, you have a version 1.0, you show it to the consumer tells you what he thinks about it, and you go out with version 1.1. Then the consumer tells you about that. You come out with version 1.2. And basically, the wonderful, magical thing about digitization and digitally oriented businesses is you co-build it with the customer through this process of versioning. And that is not something that big legacy systems do or can do. And you talked about some of the bigger, retail banks. They're not able to do this. And I think what's happened is that the development approach that you get in these digital businesses bakes in this notion of versioning around what the consumer tells you again and again and again. And I think that's one of the wonderful things about these businesses that we're now building.
And Jamie, you're spot on with that. In the 11 other industries that Dassault operates in, that's the lifecycle management process of those products and services. And it's a very key thing that is sort of missing currently from the broader financial services industry. So I'm glad you touched upon that as well. If I could ask you both Massimo and Jamie touched upon several key things around process, customer experience, customer centricity, customer innovation, cost reduction, time, all of this together. I think, like I said earlier, these are all intertwined. Innovation, product innovation for customer experience broadly, for the lack of a better word. If you could sort of just help us tie all these together in sort of a summary for this part, and then we'll move on to the next big elephant in the webinar, which is regulation.
Yeah. Well, I found the discussion extremely interesting and enlightening. I think both those ideas are absolutely relevant. Asset management business would find it very difficult to operate a completely automated robo-advisor platform. Indeed, an increasing number of existing robo-platforms are really providing both human service as well as digital service. And the whole idea is not only to do hand-holding during the onboarding phase, but the idea is also to ensure that as individual circumstances change, they could be migrated to completely human-oriented services, or they could be migrated to human services in very specific areas and so on. So this pragmatic approach is really the way forward. The second point I found very interesting was really, having customers as your innovation partner, as Jamie quite graphically put it, going from 1.0 to 1.1, 1.2, and so on. I think this is absolutely fantastic for asset management industry, because in a lot of research that we've done, many customer groups were telling us that we were as far away from our asset manager as a man on the moon. Now, what we are seeing is a completely different approach where customer centricity is absolutely key, and customers are basically involved in the kind of service that they're going to have and in the way that is delivered. So both these developments are very positive for asset management industry.
Thank you, Amin. And I'm sure we could have a much longer discussion around the pros and cons and how these things interact and the dynamics of this space between customer, product, and innovation as well. But interest of time, one of the key things, sort of the third pillar that we can think about as we have this poll on the screen, is how does digitization help impact or provide benefits around the entire regulatory space. There's an increasing burden of regulation. It's not going to end anytime soon. How can you use digitization to address the challenges or the burden, or even better, use digitization to sort of get a competitive advantage or leverage the opportunity that's coming down the pike in a form of regulation. So sort of while you think about that, there's another poll question tied to the earlier discussion we had for the audience. Where do you see the biggest bang for buck from digitization in the near future across those 5 sort of options? And I can guess which one might come up first based on the earlier poll, but we'll keep it open for 60 seconds and then we'll go to the answers. And there's actually quite a few questions as well. What I'll do is I'll mention sort of the key themes of those questions, and maybe while the panelists are talking about the next regulatory or after that, you can also comment on some of them. One of the questions that I think came up, it was mentioned earlier, was around the viability, the business model and the viability of these platforms, Nutmeg and others. Robo-advising was mentioned. But we could get to that. A business model is a whole sort of can of worms sometimes. If we have time towards the end, we'll get into that as well.
On the viability, I can give you a flash, Massimo. Yeah.
Okay.
I think that all our experience is that growth requires more investment, and more investments accelerate growth, but then it's like a loop. And not only you have much more significant development cost, but you have much more significant marketing cost. Because in those business models where you build the distribution online, marketing and the build-up of a brand becomes essential to the success of a firm. So you basically are substituting money on salespeople with money in branding. And brand is what builds the bridge with the wallet of your clients, is the trust bridge between the two. And those investments, if you want to accelerate growth, are never underestimated. So the reality is that these businesses, I think, work extremely well, at least we can speak about wealth management, for a relatively simple offering with customer that want low cost, easy, have limited sophistication of their needs, not intellectual, I'm talking about need sophistication, and then are the classic mid-mass market dimension. But the break-even point is always much higher than originally expected.
So, and then that's an interesting comment. And maybe what we can do is when we are, now looking at regulation and digitization and how these can benefit or we can leverage digitization towards addressing regulatory challenges. There's a couple of questions related to that as well, which tie into what you just commented on. How are we sure that the investor is being advised competently and impartially without being missold to, right? One of the reasons for the question says the DIY robo platform is that misalignment between what's happening before the DIY robo platform and why people are flocking more towards the DIY. And European regulations, MiFID II specifically, for example, they prescribe new business conduct standards in the provision of investment products and services. Product suitability is a big directive that is part of these new regulations, and that ties back into governance and how do you make sure that you're selling the right suitable product for the customer. So that regulation, not mis-selling to customers, it's all sort of intertwined. So maybe let's take the next 5-6 minutes, maybe starting with Jamie, you, and talk about that space and how digitization can help there.
Well, one of the principal requirements of regulation is the demand for consistency and comprehensive, reliable implementation. So automation is made to order for exactly this type of requirement. So I think that if you're and this comes up in particular with MiFID II. So MiFID II, where there's a requirement for a pre-trade suitability report or a cost and charges report, when you automate the MiFID II process, you can find yourself as a firm with a much more comprehensive, much more consistent, reliably applied process. So I think that's one of the great strengths of automation in terms of dealing with regulation, and in particular increasing regulation. So I think automation is really at the heart of solving some of the KYC and suitability issues. But there's another area where digitization I think is really important, and that is, and it's not per se regulatory, but it's related, and that's detecting risk areas and breaches. So if you think about how do we keep our businesses safe, historically we've detected breaches manually. We've done laborious file searches, or we've looked at individual events. But what's interesting is that regulators are getting increasingly interested in data mining, big data mining, to detect activity that may pose a threat to market stability. So what's interesting to me is the SEC has a market abuse unit that set up a groups in 2010, so 7 years ago, specifically to look at big data indications of insider trading. And so at the moment, they feed about 10 billion lines of data that they've gathered into their computer, and this has been enough for them to identify systemic issues of insider trading. Now, they're not getting direct feeds from the market, so they're already getting really quite amazing results from just using a limited data set. Once they open it up to look at all the stock exchange trading transactions, they're going to have a much, much better grip on conduct issues in the marketplace. And what I would say is that if the regulators are getting interested in this area, then the asset managers and wealth managers should also be getting interested in this area as well.
So talking about
I think this is
management, Massimo. Yeah, go ahead.
Yeah, well, I think this macro point is a very interesting one, because I actually spoke last week with a European regulator, and he was mentioning to me that they never had so much wealth of information about the regulated companies' transaction activities, but they may not still have the quality, number of people and system to actually monitor them in aggregate, individually. They tend to give a look to them aggregate form, or on individual case if there is an indication of issue. But they cannot systematically give a look to all the individual cases just because they don't have enough resources to manage all this amount of data.
Well, I know that the SEC, I mean, I think they may not, but eventually they're going to have to get there. I mean, I think the SEC, from memory, they just signed up Palantir in a $90 million contract to help them cope with this kind of stuff. So I think that if the European regulators don't feel that they're there yet, I think that's still the direction they're headed.
But,
I mean, that's definitely interesting that big data has a lot of, applicability across, as you mentioned, not just regulatory space, but many other areas as well. Maybe if I can ask, Amin, from a broad industries perspective, your sort of summary comments on regulation and digitization, and then if you could do that, Amin.
Yeah, fully endorse everything that Massimo and Jamie has said. Just one key point. In the past, asset managers and wealth managers were often accused of selling products which they had rather than what their clients needed. Through regulation and through digitization, it has now become possible to monitor behaviors to an extent where behaviors are becoming self-regulated as well. In other words, the intent behind the regulation, the values that the regulators are trying to promote, those sort of things, because they are now part of the surveillance process and the reporting process, this is encouraging behaviors which are definitely in the interest of clients. So whereas, regulation per se can be onerous and it can be very demanding, as far as the digitization is concerned, what it is doing is to enable asset managers and wealth managers to not only live up to the letter of the law, but also the spirit of the law. And I think for me, this is a big plus as far as digitization is concerned.
Thank you, Amin, and Jamie as well as Massimo. It's interesting, some of you had brought up in the earlier comments some of the hurdles around adoption of digitization, and I said we'll come back to that. So, Amin, for this one, I'd maybe, again, from a broad industry expert view, and you've spoken to many asset and wealth managers over the last many years. It's a kind of a blunt question. Why should senior management go for this? I mean, somebody who's 5 or 10 years away from retirement, why should they rock the boat? And this is I would
say that those who don't want to rock the boat, they're probably in the minority. The vast majority recognize that digitization is here to stay. It is going to transform business. It's going to change the industry dynamics. It's going to change the competitive landscape. And being left behind could basically mean extinction in the long term. So the vast majority of senior executives that we've spoken to, they've got a stance towards digitization which can only be described as positive. However, they're quite cautious, and this kind of caution leads to the sort of question that you ask, which is, why rock the boat if they've only got 5 years to go? There are 3 things that worry them. One of them is really the nature of these digital innovations themselves. They're far more opaque than the hand-coded systems which have been used in the past. For example, if we take cognitive systems, they need to be given ability to truly learn for themselves if they are to discover new actionable insights. On the other hand, this flexibility actually means that these learning systems are a dark black box for most people. We don't really know how and why their advanced algorithms do what they do. We don't know the reasons behind the recommendations that are being made by these algorithms and so on. So we have yet to really develop this human-machine interface where, we can understand the way the machines operate and understand the rationale behind what they are suggesting. And they also understand the intuitive side of human nature. So this is one thing which will really happen over a period of time. It's not going to happen easily, but it's this the dark black box image of technology. That is one factor. The second factor is really the legacy systems. Asset managers over a last 20 years. They've invested in different kinds of systems on an incremental basis. And what this has happened is that many of the systems have different chronological ages to the extent that systems integration is quite difficult. So it's not easy to graft this new technology on the very old systems. So that's the second factor. And the third factor is legacy thinking. Why do you want to rock the boat if your profit margins are north of 30%? If it ain't broke, why do you want to fix it? What is it that you're trying to fix? The thing is, asset and wealth management businesses have been very profitable, and the asset managers and wealth managers really want to make sure that they retain profitability, and at the same time, they don't really sacrifice client interests by simply investing in technologies which haven't been tried or tested by time or events. So those are the sort of three factors which are arguing for taking baby steps rather than making giant leaps.
Yeah, but I agree
Thank you,
with
Amit.
you. I fully agree with you. The question is how to take action rather than not to take action. I never met anyone in the industry that is not trying to take action or thinking of take action. Like no one today is thinking about building a new company with an abacus and pigeons. I think what people today think about digitalization is these are new tools. These are tools that help you to build a better company, a more efficient company, a company that has a better opportunity to attract customers and deliver a good service to their customers. So every single chief executive that has a minimum of a medium to long-term view is thinking how to do it. The difference is about the size of your current business, the profitability, the complexity, and so the different speed at which you want to embrace. And of course, a startup has a completely different vision than someone that is running a company with $1 billion of assets. But it's only a question of speed, not a question of if.
And actually, that's a very interesting last two comments, and maybe that's also a good segue into sort of our sort of closing. And can I ask each of you sort of what would you give as a key takeaway for a senior executive who's tasked with digitization, digital transformation of their firm? Can I request each of you to give sort of one key takeaway for a senior executive who's tasked with this big job? Maybe starting with you, Massimo.
I think it's about legacy as well. If you want to build a business that will be able to sustain and remain in the market in the coming years, you have to go for this way.
Okay. Jamie?
To me, the key insight about digitization is that digital capability is evolving faster than any industrial phenomenon we've seen in the past. And because it impacts customer experience and operational efficiency, which are the heart of a company's viability, it means that I think an organization can lose its competitiveness really, really fast. And because most senior managers grew up in an era in which things evolve more slowly, there is a danger that these senior managers don't react fast enough or knowledgeably enough to the competitive threat. The future is already here. You just need to know where to look for it. So robotics, things like robotics, artificial intelligence, automation, multi-channel access, social media, these are already all out there. It's just a question when they come to a theater near you.
And Amin?
My advice to them would be to really tackle three burning questions, which I regard as absolutely vital to the survival of a business. The first question is really, how is the asset and wealth industry dynamics changing? What are the factors which are really driving the change over the next 10 years? The second question is, what is the role that technology is playing in reshaping the industry dynamics? That way, to really see how market dynamics is really very much a function of technology as well. And the third and the most important question is, how do you position your business with respect to the prospective changes? How do you really craft a business plan, which takes into account how markets are evolving and how you're going to reposition your business alongside that? And that is very much a question of leadership. To me, success in digitization means having successful leadership. To me, it's less about technology, more about leadership.
Thank you, Amin, Jamie, and Massimo, and thank you all for joining us today. With that, we close the webinar. Have a wonderful day.
Thank you. Goodbye.
Thank you.
Thank you.